And basically, I reflect on how did I do on that? What do I want this next year to look like? And what is, from a financial perspective, from a health perspective, from a time with family perspective, and travel and all that. I put all these things together and I try to make a goal in each area. And I realized like I am a different person and my wealth has grown. My health has improved. I'm spending time with family. I'm taking days off. I'm doing all these things because it's an intention that we create.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henchen. Hey everybody, welcome back to The Path to Wealth. This week you will get to know Bronson Hill, a multifamily expert and mentor on wealth and well-being. We're so excited to have him on the show today because we know you will learn something new from him. He's been in the real estate industry for over 15 years and he has done business with some of the top leaders in investing and wealth building. Let's hear his perspective on inflation, investing, how he started his journey to becoming an expert in the multifamily industry, and some of the challenges that he faced along the way. Thank you for taking the time, Bronson.
Hey, I'm excited to be here, Honest. This is really great, and looking forward to talking about growing wealth, and anything we can do to help people on their financial journey is always wonderful.
So let's dive into a little bit. Where did your investment mindset start? Where in particular did the rubber meet the road when you decided that you have to make a shift and become an investor?
Well, I always knew I wanted to be an investor. I always wanted to try to find a way to develop income without me working for it. And I don't know where that started. I think there's people that I saw in business or in life or that were investors when I was younger or in college. I just thought, man, I'd love to be able to have the flexibility to work how I want or when I want or where I want. And so, I had been doing some single family investing over the years, and I had 4 or 5 single family houses. Just some were kind of low cost houses in Cleveland, and Cleveland, Ohio is not the best area or maybe the best tenants, at least the areas I was buying these houses in. And so, on paper, the numbers looked really good, but they just weren't returning the type of returns that I had expected, right? There was always an issue the tenant couldn't pay, or there was an issue that came up with repairs. There was just a lot of issues that came up. And so my goal had been to get to 30 houses and be able to retire with passive income. I had been a medical device sales professional, making over $200,000 a year. So I was making really good money, but I just wanted to have more flexibility over my time. And so I had a kind of a chance encounter with a relative who had been doing multifamily for years. And he said, hey, why don't you do multifamily? This single family thing sounds like a lot of work. And I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. And so then I learned about real estate syndication. This was about 4.5 years ago. And I just learned kind of how it worked. I read every book I could get on the topic. I ended up starting a meetup in Pasadena, California, where I live. And found my first investor there, and just basically since then, it's just been quite a journey. We've raised about $30 million now to buy about $200 million in multifamily assets. We're also venturing out into some other alternative assets, such as ATM machines and car washes and stuff in the alternative energy space. So, but it's just been awesome. I mean, really, Warren Buffett has this quote, and he says, "Unless you learn how to make money when you sleep, you will work until you die." And so it's just kind of that idea of how do you generate money while you sleep? And so that's really been my quest, is figuring that out and helping others figure that out.
Yeah, I love it. And I think all of us know somebody we love that didn't pay attention to Warren Buffett's word or never heard them, because there's so many people that have to work literally till the end of their lifetime because they didn't figure it out or they didn't learn the mechanics. So where did that mindset in your family come from? What set you up for having the mindset? It's like, okay, I need rental income or need some kind of, was that something that was going around in your family? You did mention a family member who was also investing in multifamily, or is that something that you stumbled up on?
Yeah, I remember as a kid, it's interesting the things that we're interested in as kids, they can sometimes, they manifest in our lives later on. So a lot of people that are listening, maybe you were interested in building stuff as a kid, and all of, now you're an engineer or you have some sort of technical thing. So it's interesting how these hobbies are things that we're interested in. So I remember reading about Warren Buffett when I was 13, 14 years old, and just being interested in what he did. I remember reading his biography, not when I was a kid, but as an adult, and just I think for a lot of us, and he has this saying, he says, when you talk about, investing, or he talks about the term value investing, it's like you're looking for $1 of value and you're looking to pay 40 cents. And he said, you can explain it as many times as you want to people as smart as, but either people get that concept or they don't, right? Either you like getting things on sale and you get that concept or you don't. So I think for some people, it's either there or it's not. And I think I've just always had a idea of trying to find value in places, whether that's real estate, or even when I was a kid, we didn't have a lot of money, so we'd go to garage sales and we'd find bargains at thrift stores. And I really learned. I was doing paper routes similar to Warren Buffett. He had a paper route where he'd deliver newspapers in the morning. And so I think, for me, over the years, I always was interested in that. And then when I was a medical sales guy, I was getting, I was basically at the top of my industry. I was an award-winning sales rep, did it for 10 years. We'd go on fancy trips, and it was awesome. And then I actually worked with some physicians, a couple primary physicians that they were cardiologists, but they would make, over a couple $1 million a year. But they'd work like 70, 80 hours a week. And I remember thinking and this was not that many years ago. This was 5, 6 years ago. I remember thinking this is not financial freedom, right? If you have to work 70, 80 hours a week to do this, it's not financial freedom. And so I just thought there's got to be a better way. And so, and to me, I'm a creative guy. I love writing music. I love traveling. I've been to 41 countries. I'm going to Barcelona next week. I'll be in Belize in February. Nice. It's I love being able to have freedom over my time, to be able to create, to be able to structure things how I want to structure them. And when you work a job and they say you've got to be here at this time to this time, or we need these certain outputs, even though I wasn't necessarily punching a clock, I didn't have that flexibility, and that's really what I wanted, Hannah. So to me, it was more about flexibility of time. People think they want freedom of money, but really what they want usually is freedom of time. And so for a lot of people that are like, man, I just can't take a vacation, having freedom of time allows you to be able to live a much richer life.
Yeah. Shine some light on that income from those cardiologists, because I remember a couple of years ago, I was part of my hospitality background. I was in one of the homes, and they rented like a $35,000 penthouse in New York City, and they lived there. And I was always wondering, why does a cardiologist make so much money?
Yeah. Yeah, well, it's interesting in the medical field. And again, if anybody listening is a medical professional, or there's somebody that, it has a certain specialty, it's very interesting with physicians. I have a lot of insight because I've just been around a lot of physicians over the years, between, more general practice physicians, which typically, if you're a general practice physician and you're working hard, you might make a couple $100,000 a year. If you have your own practice, maybe you can make more. You have other physicians, but you work really hard. If you're a cardiologist, it's just a very, very competitive field to get into, and it's very, very specialized. And really how U.S. medicine is different than European medicine, where it's what's called a fee for service, right? So it's, if I need a surgery, then the physician gets paid for that surgery, versus being a salaried, just everybody gets paid the same. And so in a way, the U.S. spends something like, I think it's like 16% of GDP on healthcare. It's the highest of any country in the world. And so it's kind of something really that I think that's a little bit broken, where it's like, you can have physicians that really target certain types of procedures. And then I'm not saying it's necessarily wrong, because there's benefit to target certain procedures, but there's also a financial benefit, right? So there's a benefit to the patients, but there's also a financial benefit for me to go pursue those. And so the doctors that are really good at marketing themselves, the doctors that are really good at procedures and explaining why they're good at it, they're able to make a lot of money. And so some don't do very well, but I think the average cardiologist probably makes, to start out, maybe $500,000 or $600,000, but there are cardiologists that are making millions and millions of dollars, $5-10 million a year, just because they found a way to target those specific procedures that really reimburse well. They found a way have enough team to kind of help them to be able to do it. And of course, there's overhead and there's cost to have a office and to do procedures and there's other things, but you can do very, very well. And it's not just cardiology. I mean, there's neurosurgery. There's other types of things that are very specialized that very few people are good at. And so, it pays well to do it. But the challenge for a lot of these people too is that they pay a lot in taxes. A lot of, medical professionals that I know are paying in California over 50% in taxes. And so we love trying to help people to reduce or eliminate taxes through investing.
And you made the point, they're not free at all whatsoever. They have, not only do they have to take care of everybody else working with them, for them, and they have all of that overhead, but they're slaves to that business more than the freedom that you created for yourself or the investors that truly get passive income through real estate.
Yeah. And it really, it comes down to what's important to you. And I think, the older I get, the faster the time goes, honest. It's like, we blink. I'm 42 now. And it's just like, I think I talked to my daughter about this. She's 10 years old. But I said, when leading up to 21, everything is like, I want to be older. I want to be older. I want to be older. And then you get to be 21, 22, 25. And you're kind of like, I want to go back to 21. And it's just, the time just picks up and goes faster. And so really, you can make more money, but you can't make more time. And so really, I think it comes down to what do you want to spend your time doing? Who do you want to spend your time with? And there's this book out that's called like The 5 Regrets of the Dying. And one of the things, people never say it when they're done. It was done by a hospice nurse who was helping people when they were in their final hours. And basically, it was never people regretted spending more time at work, right? They always wanted to spend more time with family. Or one of the things was they wished they had really gone after their dreams. So I think that for a lot of people, it feels scary to leave and kind of venture out on your own or to quit a job that's very secure. I had relatives, all of my family is like in education and other sorts of things, and nobody's an entrepreneur. So they're all like, why would you ever leave your $200K a year job? And I was working like 20, 30 hours a week. So like, why in the world would you leave that, right? It's the golden handcuffs. And I'm sure a lot of people listening can relate. It's like, well, it's just too good to leave. Like if I got, if I let go or something changed, whatever. But I just think it was a great time to start a side hustle, and it really supported me for a couple of years while I was able to launch the real estate and the investing business.
Yeah, very interesting. I wonder if those 5 regrets, I wonder what kind of people they asked. Are those like the 5% of people that pursue their dreams, or the average person in a hospice? Because it's so interesting. Do you currently?
I'm not sure. I think it's just the average person. I don't think they. Yeah.
Yeah.
Oh, I just think it's the average person. I don't think they targeted business people or entrepreneurs or anything.
Yeah. So do you currently feel like you made a shift to truly living your dream life? Like you obviously have a lifestyle by design based on the real estate income that you're having. I mean, being able to fly to Barcelona and Belize, and that truly sounds like lifestyle by design to me.
Yeah, absolutely. I mean, I think, there's an event that I went to a few years ago. It was called Create Your Future. And it was basically a goals and, what you value event. And I think in our lives, life just kind of happens. There's a way that, things just fill the time. And before we know it, months and years have gone by and we're not closer to our goals. And so that's why I'm a big goals person. Actually, we're recording this beginning of, January of 23. But, in December, I do this each year. I get together and I just get a little time away and I review my goals from the prior year. And I made progress on all of them. I achieved half of them, 5 out of the 10 big goals I achieved. And basically, I reflect on how did I do on that? What do I want this next year to look like? And what is, from a financial perspective, from a health perspective, from a time with family perspective and travel and all that. I put all these things together and I try to make a goal in each area. And I realized like I am a different person and my wealth has grown. My health has improved. I'm spending time with family. I'm taking days off. I'm doing all these things because it's an intention that we create, right? So I'm a huge goals guy and I literally just read them this morning. I just keep going through and trying to keep those things in front of me because if you don't create what you want, you'll just simply fall into like life as usual. And I think that's why a lot of people just kind of get stuck or they feel depressed, is they don't have a sense I'm working towards something, right? They're just, I'm stuck here. I can't change any of this. In reality, we can change a lot. Maybe we can't change everything, but we can change a lot in our lives if we just simply have an intention and focus on it.
Yeah. And this is so interesting. I was speaking, and I know a couple of people in my circle, and they go by the exact opposite. They go 100% with the flow. Their life is just like this, and they're as happy as it gets. And then there's people like you and me who are super intentional. You're like, I mean, I couldn't have been planning everything I've done, because I didn't even know the majority of things when I started out. It's kind of uncovering as we proceed on the journey. But we do become very intentional and goal driven, and it's so interesting to see those polar opposites. How some people just go completely by the flow and kind of feel into it with intuition, and then there's people like you and me who are a little bit more goal driven. Like, okay, this is how we're gonna go about this here. So then, multifamily, and I love the way you explain it. You came from the single family space into multifamily, and that seems to be generally how it goes. I think every investor progresses. We've owned a couple of single family homes or something, and we're like, this is a nightmare. Let's go and scale.
Yeah, no, I think and there's a little delay here. I think it's common, and I wonder why that is. I've thought about that a lot. Why do we start with single family? And I think for me, I think it's common to most people that we're familiar with single family. So a lot of people know that, they know people that have become financially free or have done very well in real estate. They think, oh, that's great. I'm going to go do real estate too. And how they think is that, oh, I've lived in a house, so I need to buy more houses. And it's a subconscious thing we don't really think about. But in reality, these days with interest rates, what they are, it's very hard to find anything, at least in my opinion, that cash flows at all. In LA where I live, we don't know anything in California. It's all in Florida and Georgia and Alabama. But here, it's like if I were to buy the house I live in, the payment would be almost 3 times what I pay for rent. Right. So it doesn't make sense. It's not what we call cash flow positive. But there's all kinds of problems with single family where it just, you can get 1 or 2 houses. But I always ask people this. I say, can you look at your current investing strategy and 10x the number of investments that you have? So if you have 3 or 4 houses or 2 houses, can you go to 20 or 30 or 40? Like, is it possible to 10x? And if you can't 10x it, then it's not a scalable strategy. It's not going to work. It's not going to get you where you want to go, right? And how much cash is it really producing? Maybe you're producing $100 or $200 cash flow per house per month. Maybe after you count, management expenses and the repairs and tenant issues, whatever. But when you have 100 units in one place, it's so much more efficient, because you have full-time, property management that, is dedicated to that property on site. You've got a maintenance guy. You have typically all the same appliances and all the same paint colors, and you get a discount on the price of the maintenance person because they work for you. So there's just so many benefits to go larger, faster. But I think you said something interesting. You said a lot of people start with single family and then they go to multifamily. But I would say the majority start with single family, and a lot of people just quit. They either stop and say, okay, I've got 1 or 2 houses, that's enough, or I'm never going to do this again because they have a nightmare thing with a tenant. Most people, I think it's probably less than 5 or 10% actually start going and buying larger multifamily stuff because it's work and it's time and it's effort. And really, especially if you're a busy professional or a business owner, your time is your most valuable thing. So you should not be sitting there managing all these investments yourself, in my opinion.
Yeah. I guess that also speaks to our circle. I mean, most people I know, given that we love multifamily as an asset class, they go and invest in multifamily. But and sometimes I forget about that. And the same is, I mean, you and me, we're both creators. We have a platform. We are somewhat in the public domain with our podcast. And sometimes I feel like, oh my God, everybody is producing content and everybody is going after these investments and everybody. But the reality is, it's just because that's our circle, And once we zoom out and we look at like the 8 billion people that live on this earth, it's like, okay, we're a micro speck of a single country even, forget about the larger picture. So it just seems to be our echo chamber in which we exist and choose to live in.
Yeah, absolutely. I think that my opinion is that in multifamily or syndication in general, which is just the fancy way we say to structure investments and where people invest passively into a larger deal. 98% of the people that should be doing syndications are not. They've never heard of it, or they're just, they have analysis paralysis. And so that's what I feel one of my big passions is trying to educate people to get off the sidelines and really into these investments. I was actually an investment advisor for several years. That was a previous side hustle while I was doing the medical sales. And I just saw like how Wall Street is really set up as this way that they win no matter what. They always charge fees no matter whether your investment goes up or down. We've had since the last 100 years, you've had multiple times where stocks and bonds have gone down 30 to 50% in a 12-month period, and but yet we're taught that these are safe traditional investments, and most people have a money person, and they don't realize they're getting charged typically around 4 to 5% fees annually. There's a lot of hidden fees that are there. There's a lot of additional fees, and I just think real assets and syndication serves people so much better, and it doesn't have the volatility. It's got way better returns with way less volatility, and most people just never heard of it.
So how do you usually help people that are maybe on the fence? And I mean, we all have them in our circle, but how do you help them overcome the fear? Because there's many who think this is not a safe investment because it's not held by an institution as such. They don't see that it's still professionally management, and that actually, because of the scale of the operation, we are able to have professionals at every step, whether it's lawyers, property managers, for everything, there is a professional person involved. So how do you usually help people go through the roadblock that they might have in their mind when it comes to alternative investments like this?
Yeah. So, one thing I start out with is I'm not, I am trying to help people to understand the asset class and to get comfortable with it. Whether they invest with our group or your group or somebody, it doesn't really matter to me. It's more just, hey, I want to be helpful on that process because I feel like they'll be much better off understanding. And so I try to get it away from a sales pitch and more of just education. Hey, I think you will be better off as an investor. You'll be better off in your financial future by making this decision. Here's the reason why. And some people, you can't necessarily convince. I'm not trying to anybody who's got their arms crossed. Hey, you're trying to convince me. It's like I'm not trying to convince them. I'm not trying to sell anybody on it. I'm just simply saying like, hey, this is something that's changed my life. Yeah, exactly. Somebody's in the corner and they're got their hand. It's like, I'm not trying to, and I've had 1,300 one-on-one phone calls with high net worth investors, average net worth of 2 million. And, about 17% of those calls that I've had have invested in one of our deals. That's about 1 out of 6. So not everybody who I've talked with actually invests. So it's not that I've been uber successful and everybody just falls under a spell. Always, I will invest in your. That's not what it's about. It's about helping them on their journey. And not everybody has the same financial goals. Not everybody has the same timeline. Not everybody has the same expectations. So I think it's just really getting people to understand that Wall Street. You look at the conflict of interest, look at how volatile it is, look at the tax stuff, whatever. Well, there's all these benefits, tax benefits, and lower volatility, and just better assets. And what happens if there's something called counterparty risk, and one of these companies fails that's involved in a financial asset such as stocks or other sort of financial assets, then you lose. And so, I'm not saying people do it initially. What my goal for a lot of people is saying, okay, somebody's got a net worth of 5 million. You don't have to put like all 5 million immediately into multifamily. Put 50 or 100,000 into a deal. Now, for some people, that's a lot of money. But if you have a net worth of 5 million, that's 1 to 2% of your net worth. So that's not a lot of money, right? And you put money in, and you'll learn. You'll learn how this works. And then something happens, Hannes, typically on that process where they start getting the cash flow and they see how the deal performs and whatever, and they start getting excited. Like, this is actually legit. I could actually do this. And then they start wanting to put more of their net worth into more deals. And there's a learning that happens. And the learning is not just, hey, I'm making money. It's that I can actually do this. I can get better returns than the stock market. I can do it with less risk. And it's something that I can actually find a way over time to predictably replace my income. And that's where the freedom part comes is, you've got a business, you've got a job, whatever. Well, how could I ever replace this? I couldn't do it in stocks. It's too volatile, take money out. But if I put it in other types of things that are more predictable, then I know that I can actually potentially leave and have cash flow, which is really magical.
Yeah, I think there is something very powerful about getting that first cash flow check or the first full cycle check. Those are those big aha moments in investor life where you're like, oh my goodness, this could potentially, be my new salary. that, my real estate pays me and not my hourly labor or, whatever effort I have to put in the month to get the money.
Yeah, absolutely. I think, and there are different types of investments. Multifamily has been great for appreciation. It produces some cash flow. We have this ATM machine fund where we work with the fifth largest operator of ATMs, and that one's been the most predictable monthly cash flow deal that I've seen. They're just like clockwork. They haven't missed or reduced a payment over 10 years monthly, which has been awesome. But there are different types of investments out there. I call multifamily is kind of like the gateway drug, where like you start with multifamily and then it like kind of opens up all this other stuff where you're like, you can kind of understand it. But multifamily is very understandable because it's a great place to be in a time of inflation. Everybody needs housing, especially in the U.S. There's a shortage of between 3 and 8 million apartment units. And then there's just, you just see it. You just see that, okay, these are, maybe it's not necessarily a place I would live in, working class housing in apartments, but I have lived in those, right? So I'm familiar with the asset, and you get to use debt to buy it. So by, being able to have a loan, you get to basically get paid to do it in a way. And if you have, let's say you put 25% down on a big apartment building, you don't need a big improvement in the value to increase your equity, right? If you had a 25% increase in the value of the property, you haven't had a 25% increase in your money. You've had a 100% increase in your money, right? Because you only put 25% down. So it's really magical. You get to use other people's money. You get to hedge inflation. Rents and inflation really go hand in hand. And it's just an awesome long-term strategy to grow wealth.
And I think what you just mentioned about the inflation part is crucial, because rents actually usually follow the trend, and they go beyond the inflation. So at least for us as investors, it's not that we want inflation to be high, but we benefit from it being high.
Right. Yeah. Well, inflation, and I actually wrote a guide. I'm happy to give it to your listeners later. It's called How to Use Inflation to Your Advantage. It's at my website, bronsonequity.com. But it's basically like, inflation. I think I saw something actually. I know you're from Germany. It just came out. Germany's had the highest inflation they've had in 70 years in Germany. And so that just came out. It was a headline that just came out there. And it's like every time you go to the pump, you see the cost of it. You're getting penalized by that. Every time you go to the grocery store, the stuff that costs $2 is now $3. Like everything is going up. So how do you get on the side where you're not getting punished by it? You're actually getting benefited by it. And the way to do it is just that strategy. You buy real assets that pay you to hold them. If you can use debt to do it, it's even better, right? Because the debt these days, it's actually considered negative real interest rates. We're basically below the actual rate of inflation. We're able to borrow, at 7%, when inflation is officially, at least in the U.S., of 7.1%. Or if you look at the unofficial numbers, it's more like 15%. So you're getting paid to basically buy this stuff, and you're doing it at a leverage thing and cash flowing while you're doing it. So some awesome strategies there.
But I think that's another hurdle, because most of us are being taught that debt is bad. And nevertheless, in the US, it's one of the markets that has the highest consumer debt. And I think people don't realize that they're on the wrong side of debt. There's the good debt, that you've just spoken about. And then there's the consumer debt, which is actually the worst kind of debt, because it really gets you in a long-term pickle.
Yeah, absolutely. Yeah. I think if for a lot of people, for example, Dave Ramsey is somebody in the US that, most people, they need a Dave Ramsey type program. That really is 101. And I think he does a lot of service for a lot of people because, 90% of the people have credit card balances that, are having bad debt or doing things that just, they're not living within a budget. Maybe not 90%, maybe 80%, but whatever those percentages are. So they need help on how do I save? How do I save more than what I spend? And, getting out of debt is good. But I think you will never become wealthy if you are following Dave Ramsey. You'll never, and I talk to people today and I'm trying to pay my house off and I'm trying to whatever. I'm thinking why would you ever pay your house off? If you have a 3% interest rate on your house, I would pay the minimum payment for as long as I possibly can, because the asset is the loan. Yeah. It's no longer you have such a low rate. It's below inflation. Why would you want to pay it off early, right? You're basically guaranteeing on the money that you're investing, you're only getting a very small, 3% return. You're getting a very low return versus if I can invest that and get a 15% return somewhere else, why wouldn't I do that, right? And so a lot of people just don't understand. They don't have the just the awareness or haven't been taught that. So I think that there's a 101 where it's like, yes, these are some basic financial principles. And then, using good debt, like as you were saying, Hannes, it can really be a powerful thing in your life. And you've got to, look at the risks and look at the considerations. Everybody's different. And so I think that's important. But I think there are some powerful ways to grow wealth by using good debt.
Yeah. It's funny that you mentioned that with the interest rates on the primary residence, because a friend of mine just last week, he was like very proud that he's actually down paying a lot more than he has to. And I'm like, that's not smart, man, because you have less than 3% interest rates. Like you want to hold that as long as you can. You don't want to down pay it right now when cash is king, and when you can buy things on sale right now. You don't want to pay down low interest rate debt. But it's that's part of the learning curve.
Yeah,
and
absolutely.
And I think that's one of the things I acknowledge you for, stepping out into the public, making sure you're educating people and you're sharing what good debt is, what bad debt is, how can they make sense of investments and how they can get into different investments. And it's very interesting to see that you're venturing into different spaces. And you mentioned ATMs. And I think that has been one of the spaces where I keep thinking about what happens to those ATMs down the road. I mean, one of the big things that happened even in Germany, which is predominantly cash forever, now with COVID, now it's gotten very, very cashless. So what is the future of an alternative investment like ATMs in a basically cashless future?
Yeah, it's a good question. I mean, really, to my knowledge, there's never been a society or a country, I should say, that's completely done away with cash. I believe China is kind of trying to do it, but they are a authoritative communist government. They're a different type of system. I can't speak to Germany. I can speak to the U.S. Now, the more things have gone digital in the U.S., now this conversation really, and I think the primary risk of ATM machine investing is, will cash go away? But this conversation has been around really since the 90s, since credit cards and other things, and over the years, PayPal and other things have come out. But and it's really fascinating. I talk to investors about this because the people that invest in ATM machines as investors, high net worth people, like they never use ATMs and pay a fee, right? I never use, even when I travel, I hardly ever use ATMs and pay a fee. But there is a segment of the population, it's 5 to 10% of the U.S. that's the unbanked, it's the underbanked, it's immigrants, it's people that have cash businesses, they get paid for jobs under the table or whatever. And there's people just factually, there's more transactions and there's more cash in circulation than there's ever been. So it's kind of like you have two trends, right? You have these polarized trends, and the more things are getting digital, the more there's things are staying in cash for a certain segment of the population. Now, with that being said, what does that look like? Well, what is it? What are the risks there? And just like I said, I think that would they do away with cash? Would they create a central bank digital currency? They've talked about doing that in the U.S., which is true, but I don't think they would actually do away with cash. And the reason why is politically, I don't think there's a will to do it. On the right, you have issues of privacy to say, hey, Hannes, you can't operate in cash at all. The government has to know all your business on every transaction. I think people politically on the right will say, no, you got to have some right to be able to operate in a way the government doesn't see everything, right? And politically on the left, you have, who would this hurt if we did away with cash? Well, it's people that have cash businesses. It's people that are immigrants. Government benefits come on debit cards now. So the people are getting cash and they're spending it, whatever. So I think that politically you have all these issues of why this won't happen in the U.S. But typically, the investment we work with is a 7-year investment, but the payback period is just over 4 years. And when you count the tax benefits, it's around 3 years. So really the question is not, will it ever happen someday? Will it happen in the next 3 to 4 years? Cool. If the answer to that question is, well, probably not, then I think there's a case for the investment. So, but anyway, so that's my opinion on it. Everybody has to have their own opinion, but I think you can invest in things that you don't necessarily use, and this is an example of that.
Yeah, 100%. I mean, especially if you understand it from that perspective, and I was speaking to Michael Gadri, who is also an operator of a lot of ATMs, and he gave me some really interesting insights, like what's the average draft and where are some of the more profitable locations. And it turned out that when they first came out with legalizing marijuana in the US, that those dispensaries had to use ATMs everywhere because they weren't allowed to run credit cards because of federal law. It was just so interesting to know those nuances, and then
Right.
and understand the investment landscape around it. And another one you mentioned is car washes, and I've been thinking about car washes last year more so because I've seen them going around. Especially the brokers have been pitching car washes in New York quite a lot, and I'm wondering what's your take on car wash investments. And the fun thing about that is, I guess in a driverless world, you still need clean cars. Everybody still wants to get into a clean car. So you're good on that front, no matter what happens with automation.
Right. Yeah. It's so the interesting play here is in the U.S. There's just some interesting trends. Right now there's so much money on the sidelines. Bloomberg had a study that came out a couple months ago that said Americans in 2020 had $1 trillion with a T, 1 trillion in savings in bank accounts. And that was the highest, it was about 1.2 trillion. But now in 2022, 2023, it's been 5 trillion. So there's 5 times the amount of just money sitting there. So what's happening is there's a lot of these private equity companies are looking to buy up some of these assets such as car washes, but they don't want to buy one car wash, right, that produces $3 million. They want to buy 50 of them, right? Because when you buy in scale, you pay a higher multiple. So when you sell one car wash that's profitable, it's typically between an 8 and 10, or maybe you sell less than a package of 5 or 10 of these car washes that, are a certain size. But when you get to 50 or 60, you can sell them at a multiple of 20 or 30. So this is a common strategy. It's called a roll-up strategy, or it's a private equity strategy where they go buy a bunch of things and put it together and then sell it to a larger group that says, now I've got this asset that produces this much cash per year. It's well run. It's got good management, all this stuff. So that's really the strategy here. So we're working with a car wash, just a really great car wash franchise group, putting together about 50 to 60 of these over the next few years. And it's a great deal for investors. There's some depreciation involved, some tax benefits, and the returns are awesome. So, that's kind of something that we're really excited about doing. And again, I always tell people the investment is not as important as what the investment does for you. So if your goal is to reduce taxes, if your goal is to have high cash flow, if your goal is to have appreciation, if your goal, there's different goals, and it's important to understand what your investing goals are, and then to look at assets and say, okay, well, the asset, whether it's multifamily or it's car washes or whatever, ATM, whatever it is, what does it do for me? What are the risks here? And I think having some diversity is good, especially in assets that still perform well, even in times of recession. So I think that's very beneficial.
Yeah. Do people still wash their cars in the midst of recession? I mean, obviously, I think in the New York area, a lot of the car washes are heavily used, I would say, by the cab industry. Like, the limousine and cab industry is like one of the primary users when I think about the day-to-day usage of it. So, I mean, those cars always have to be clean no matter what. But I was actually wondering, and
and I think New York City, we don't really buy. Sorry, you said you were wondering. There's a little delay on here, so I'll just go ahead and respond. So I mean, I think in New York, city is going to be very different. We buy typically in other areas that are a little more kind of the South or Midwest, and typically in a lot of these areas, especially when you get snow, there's huge lines for the car washes. And you think, well, why would that be? And then why would you have all these lines? Well, it's because they salt the roads, or they put chemicals on the roads. And so if you have that on the bottom of your car, you've got to get that washed off. So, car washes will help with that as well. So, there's just different, and if it's a really good car wash, the car wash group that we work with, the goal is to, get somebody, a busy professional, get them, on and off the road in 3 minutes. So they come in, they've already got a membership, they go in, they go through, and the whole thing takes less than 3 minutes, right? So if you can do that, it's predictable, it's reliable, everything's taken care of, and you're back on the road. That's pretty convenient, right? So the idea of having convenience and doing it in a way, typically car washes are run there. You go in and there's kind of a ho-hum attitude, and people are kind of down at it's just kind of like a depressing place to work. This place is bright and the workers are happy, and it really has a different feel than a lot of other places that I've been. So I've actually visited some of the car washes as well. So it's pretty cool.
Interesting. So given that you spend so much time on goal setting, what is your outlook for this year? What are some of the key pillars that you're going at this year?
Yeah, so I have goals, different areas. I'm a big health guy, so I've got some goals there. I've started doing cold plunging, which is a whole other topic where it's kind of like an ice bath. I have one at my house where I'm trying to do 160 cold plunges a year for about 5 minutes at a time. So that's a whole nother topic. But doing that, I'm trying to do my Spartan racing, which is basically obstacle course racing where you run and go over obstacles and you go through the mud. And so I've finished top 10 a couple times for my age group. I want to finish in the top 3, which is on the podium. So I've got some goals there. I'm working through a health issue now, but I'm hoping I'll get back to that. Got some, trying to do more deals, got some financial goals there. Traveling, I think I traveled 6 times internationally in 2022, trying to travel 4 to 6 times internationally this year. And just, spending time with my daughter, just doing the things that I value, right? Because I think when you make goals, it's important that you start with what do I want my life to look like and what do I value? And then from there, then you can create goals that align with that. If you're just like, I want to do this, I want to do this. It's like, well, how does that align with your goals, right? How does that align with actually what you want? How does it align with what you value? Because the things that even you and I, we may have different things that we value. So the goals that I have or the values I have, they may not be necessarily what you have. And that's what's really cool is you can find out what gives you life. And as you create your future, you can figure out, okay, what if I was living this life, what would my best life look like? So that's something I encourage everybody to look at.
Yeah, I love that. And this is a great transition to one of my favorite and final questions is, what does a life well lived look like to you?
I think that's a really good question. I think that's very subjective. I think for me, there's a few kind of core values that I have. So one of my primary core values is my faith. I mean, I wouldn't call myself religious, but I love Jesus. And so to me, it's just somebody who lives a life that's response to what God puts in front of me to do. I think somebody that really takes care of their family, really spends time with their family and really gets that right. And then somebody who, really goes after their dreams, that I don't want to be. There's a quote that says at the end of your life, you regret more the things that you didn't do rather than the things that you did. Right. So I don't want to be, and that's what really inspired me to want to leave my job was like, I turned 40 and I just had some other personal changes in my life. And I was like, I don't want to be 70, 80 years old and be like, man, I really wish I had gone for it. I wish I had just seen what I was capable of, right? Because I've had this in my heart. And so I think for people, it's really living a life without regret, right? Saying, even if I fail, like kind of that quote that Teddy Roosevelt said, even if you fail, you're failing while daring greatly, right? You're putting yourself out there and you're living a courageous life. So to me, I think it's really someone that lives consistent with their values. And, Warren Buffett, I quote Warren Buffett all the time, but like it's gospel or something, but he talks about this idea of like, you have the outer scorecard of how people look at you, right? Because you can live your life based on how people view you. But really what's more important is the inner scorecard, right? What are my values? How did I live according to the values or what I said was important to me? And I think that's a better thing to look at by far than how do I appear successful in the eyes of others. Because if you just simply live the life that you want to live and you're in your own eyes saying, I'm living consistent with my values, I think that is a successful life.
I love it. I love it. Well, ladies and gentlemen, Bronson Hill, the man in the arena. Where can people connect with you with the ATM, multifamily, and car wash opportunities?
Yeah, I sound like I'm wheeling and dealing here, but no, a great way to connect is we have a lot of educational content we do. On my website, we have this book, which is How to Use Inflation to Your Advantage. It's 50 color pages. It just gives some of the strategies I've talked about how you can use inflation, use debt. You can use certain assets to really grow your wealth. And then we have our investment club that's listed on there. We have a bunch of stuff on our YouTube channel. I actually have a podcast as well called The Mailbox Money Show. It's similar to this. It's dedicated to helping passive investors grow their wealth on social media as well. So look forward to connecting with anybody who wants to talk about real estate.
Awesome. I love it. And I'll make sure to put everything in the show notes, especially, the links to your podcast as well as your website. And I encourage everybody to check it out because if you're still with us, you definitely know it's well worthwhile. So thank you so much for taking the time.
Awesome. It was great being here. I look forward to connecting more. Thanks, man.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.